Hello, today we're talking with Matt, the mortgage guy, all about how lenders get paid and does their compensation impact your loan at all? So it's going to be a very good conversation. Matt's very direct and straightforward. If you've ever been on his channel, everything will be linked below. And I'm excited about this conversation. So Matt, let's get right into it. Introduce yourself to everyone.
Sure. First, I want to say thanks for inviting me. And as you know, and as why you invited me on here, I shoot straight and I want people to have good, honest information. So no question is off limits. You ask me whatever question you want to ask, I'll answer it as directly as possible. So anything that you think that will help your viewers, I'm game, right? And I'll pull back the curtain as I do in my videos.
We're gonna pull back the curtain. That'll be helpful.
Right, exactly. And any questions you want on lending so that, when buyers understand it better, they feel empowered to make better decisions. So that'll be the goal of today's. And as for the introduction, Matt Gouget, affectionately known as Matt the Mortgage Guy. I've been in mortgage for, I guess, about 8 years, and I did 5 years in direct lending. And then I guess it's been about 3.5. Mid 2018, I made this switch, became a mortgage broker, still serving people, still educating people. So a lot of the same stuff, just in a different channel. And I really enjoy it, like you do, I think. Yes. Getting on YouTube and getting on social media to educate folks, at scale is something that I'm passionate about. So I'm looking forward to the chat.
Yes, I'm excited about it as well. All right, so the first question coming off the bat, how do you get paid, Matt? And because you were a direct lender before, I want to talk about that too. So as a mortgage broker, how do you get paid? And then how do the direct lenders get paid that are just lending directly, not going through a mortgage broker? If you can break that down for us, that'd be helpful.
Sure. And this is a common question. People, as a mortgage broker, it's all transparent. You can see it on the documents and it will say paid by others. If I broker a loan to United Wholesale Mortgage pays me. If I broker it to Home Point pays me. And different brokers might be set on different compensation plans. And so it might be 1.5%, it might be 2%, it might be 2.5% of the loan amount. But whatever it is, it gets paid from the wholesale lender where I'm sending the loan to the broker, right? And so It's not being paid out of pocket by the buyer, which a lot of times people, they get a $400,000 loan, they see $8,000 being paid to the broker, which, like real estate, there's costs, right?
Right.
8,000 doesn't go straight into my pocket.
Okay.
There's staff, there's taxes, there's all kinds of other things, but that's essentially how it works. And then on the retail side, it's fairly similar, except that on the retail side, you'll have the whole retail operation that kind of sets their margin. And then on the loan officer level or the branch level, that's where 1.5% gets paid or 2% gets paid. The thing that I think people don't understand, and without knocking retail, right, is you don't have any idea what that margin is set at. As a broker, you'll see it 2%, right? And then the brokerage might get some, the processor might get some, the loan officer might get some, and then pay their staff, or however that works. You see it. With a direct lender, the whole company might be saying, we're going to make 3.5% or 4% in total. Executives get some, the vice presidents get some, the account executives that go visit the branches get some, the branch gets the 2%, and the loan officer gets 1.5%, whatever that shakes out to be, right? Okay. And so that's why more often than not, and I don't try to knock, the other channel, right, it's going to be more expensive to get it in a retail environment. And, as somebody who educates folks and is trying to get every single client that I deal with the best deal, part of the reason why I left retail and came to wholesale is because there was, less margin built into the loan.
Okay, gotcha. Good to know. All right, so now let's talk about this. Now we know how you're getting paid. You're getting a percentage of the loan amount, right?
Right.
So does that percentage in any way impact my interest rate or the fees that I'm charged? So for example, if you offer me conventional at a certain interest rate, do you get paid more? Or if you offer me FHA at a different interest rate, do you get paid more? Does what you offer me change your compensation in any way other than the price of the house?
No. And here's something that I people are always worried. right?
Yes.
People, why this, why that? Why did we talk about FHA, but we never talked about conventional? Why are you telling me that I should do this and you're advising me this? And truth be told, whether it's with me, whether it's a bank, a direct lender, so much stuff has been put in place since 2008, 2009, when, you know, this everything collapsed.
Crashed.
Right?
Yes.
And it's all in place to protect the consumer. As a broker, if I've got 50 different lenders to broker to, and I'm getting 2% from one, I've got to get 2% from all of them.
Okay.
Because what they want to avoid is I'm going to send them to this lender and get paid this. For these other clients that I have over here, I'm going to send them here and get paid this. It just doesn't happen, right? No matter where I send it, and whether it's VA, FHA, conventional, it's going to be the same compensation to avoid that exact thing, right? And there's been so much stuff put in place to protect the consumer, and it's all good stuff. Just you know, thinking about some of the stuff that was there in 2008, right? Where if somebody could charge 2 points here, get paid compensation from the lender, and charge 2 points on the back, and really they could charge somebody 5x what they charge somebody else. There's obviously problems with that, and that's been, you know,
like regulation Z, I believe, if I'm not mistaken. I think there's a regulation that kind of stops you from having your interest rate impact your compensation.
Right.
Okay. Yeah. So that's a good point that you made. Basically, you will get the same compensation, whether it's FHA, VA, USDA, or conventional. So there's no incentive for you to say, well, you should do conventional or you should do FHA.
Right. And what I tell people generally is, you know, somebody like me or most lenders that I would guess that you would refer to, they're working on referrals, and they've got a business that, you know, I don't have a call center. I don't have marketing where I can have a commercial during the Super Bowl, right? And so, like, I want your clients to have the very best deal and the very best experience. So they refer their cousin, their aunt, their next door neighbor, their coworker, all of it, right? And so I'm an advocate for the consumer, trying to get them the best deal, because truth be told, I rely on their referrals, right? And so, you know, every client's going to come in different, and I try, you know, to do my very best to educate folks on the why. So it's not just like, you should go FHA, but put them side by side. And that's what we generally do. And I advise my staff that, like, if we're going to advise somebody to do FHA, not only do we tell them why, but put it right next to conventional and say, you know, at 3% down conventional, the terms are terrible and the mortgage insurance is even more expensive. At 642 credit score, this is what FHA looks like, and it's much better than conventional. And so that's why we've chosen it. But look at them side by side. Because at the end of the day, as a consumer, it's your choice, your loan, your down payment, how you structure it. You know, it's 100% your choice. As an advisor, you just want somebody to present to you the options and then tell you, in my professional opinion, based on the information I have, here's what I think is best for you.
Okay, very good. All right, so we answered those questions. Next question. Do you offer, okay, so you're a broker, so you deal with a lot of different lenders. Do they offer you incentives? So, like, okay, so say that mortgage company A is like, oh, we give you a $500 bonus if you you refer us in December, you know, or something like that. Are there those kinds of incentives out there that may sway you either way to recommend one lender over the next as a broker?
I don't think so. I mean, if there was, I wouldn't pay attention to that, because at the end of the day, you know, going back to a model where we're reliant on referrals, lenders are trying to get our attention and try to get us to send them deals by saying, we've got a smooth and easy process. You know, we've got the best pricing. We've got this, you know, there's clear leaders in the broker space. And so it's kind of funny where, you know, any broker that says, oh, I've got 50 different lenders I can broker to. Truth be told, we're brokering to 4 or 5. You know, I'm actually wearing, which sleeve is this? Proud UWM partner. United Wholesale Mortgage is the #1 wholesale lender. It's not even close. They've got the best technology, the best process. You know, on most scenarios, they're going to be the best in price as well. So it's an easy decision. I might have a 585 FHA where I know I'm going to go to Equity Prime Mortgage. They're actually based in Atlanta. They're near you. And they've got the best product for that specific client. I might have a VA deal where it might go to Home Point. I might have these one-off deals, but for like a majority of the business I'm writing, again, end goal, best experience. We know in an environment like this, I've got to be able to close it quick because, you know, you and your team are telling lenders, hey, listen, this thing's got 14 offers. We've got to close in 17 days. We've got to release this contingency in this many days. Like, can you perform on that? If I look out at different wholesale lenders, there's only a handful of them that can really perform on that. And so, you know, that also goes into that decision, but they're not incentivizing it necessarily by, you know, specials or discounts.
Okay.
They're incentivizing by saying, we've got a great technology platform, which is a huge thing right now.
Right.
As most folks know, like, and clients want a smooth experience.
Mm-hmm.
You know, I joke with some mortgage colleagues that, you know, the real estate and the home is the emotional part. That's what people really want. They're not lined up excited to get mortgages like it's some exciting thing.
Right.
You know? Just give us a smooth experience and get us the dang money so we can buy the house.
So we can buy the house. Right. So you're saying that you have, Matt, you have access, right? You have access to 50 or, you know, more, but in reality, there's only, you know, a small group of those lenders that actually can perform for different buyers, depending on what that buyer's need is.
Correct. Yeah. And I mean, I probably, you know, 20 that can get the deal done in 30 days and whatnot. But, you know, when you've got speed and service and technology and price all in one at one lender, you know, they might get 70% of the deals. And then you might have, you know, a couple other lenders that get small chunks based on the client. And this is something that, you know, is going to go back to, you know, not being steered to put different clients in different things. What our job is as a broker, and really any loan originator, is to take every individual client and say, here's how much you have down. Here's what your credit score is. Here's what you're looking to do. And take that information to say, based on your specific scenario, this is what I think is best for you. Still present a couple options, but more often than not, it's really clear to me and my team. This is the best mortgage option for you. And this is what I suggest, or this is what I advise. And, you know, having different lenders is great because there's going to be, you know, every single client is different. That's why when somebody calls up and they're like, what's your rate? What's this?
Right.
I need to diagnose the patient first, right?
Right, exactly. Yeah, you can't just say, what's your rate? I don't know your credit score. I don't know how much you're putting down. You know, you have to get all that information first. That's very good information to know. All right, so next question. We only have about 2 more questions left, 2 or 3. All right, so how do you make sure as lenders? Because I know as realtors, we have, of course, we follow the Fair Housing Act and we make sure that we're trying to treat everybody, you know, we're not steering them to certain properties. We're not discriminating against them. As a lender, how do I know, how can I be assured that I'm not being, you know, not treated fairly or discriminated against in interest rate and that sort of thing? Because I know particularly in the African-American community, there's been a history of mortgage discrimination and that sort of thing. Because some people are a little bit apprehensive when it comes to qualifying for a loan, their interest rate, to see, am I getting the same rate as somebody else with a very similar credit profile, income profile, all of that? How do you like tell people that they are being treated fairly?
Right. I mean, I think there's a lot to unpack there probably. First and foremost, people are legitimate to have concerns, you know, and I think that, you know, going through the crash, all the shady stuff that happened in mortgage and happened in real estate, you know, there's a right to be concerned and there's a right to say, hey, listen, I know that in, you know, 2008, 2009, or maybe probably before, probably 05 to 08, you know, I lived in Mexico for a couple of years. I've got, you know, tight relationships with the Hispanic community. There was, you know, Hispanics that were getting charged double because, you know, probably because of financial literacy. You know, if they weren't as educated, you'd say, you know, a loan officer who didn't have a lot of, you know, morals, ethics,
integrity, all of those things,
right, would charge double or put somebody in worse interest rate. You know, back to what I said earlier, it's the same for everybody. I'm getting paid, you know, the same 2% on every single client. My only obligation is to get somebody to the finish line. Mortgage folks only get paid if a loan closes. So if an application comes in, you know, you put that together based on income, based on credit score, based on available down payment, and then it gets plugged into Fannie or Freddie's automated system. that spits out an approval or not. And then as originators, we look at it and we go, oh, if this person had more reserves, maybe we can get approved eligible. If this person had 5% down and said 3.5, maybe we can get approval that way. If I feel like the goals are aligned, if I only get paid if I can get you a loan, I want to get you a loan. And that's if you're Black or Hispanic or Asian or white, no matter what, right? The commission checks are all the same color.
Yes.
And so, I'm probably lying to say that, there's some people that feel different, right? Because there is, but I think that a vast majority of mortgage professionals are trying to do right by everybody. There's certainly nothing within guidelines or within that's going to be discriminatory, right? Any discrimination that's going on, and again, let's be honest, it probably is going to be, on a personal level where somebody says, I don't want to.
Let me question this a little bit more. So if like Sarah's mortgage application comes over or Shaheedah's mortgage application comes over, maybe they ask more questions of Shaheedah than they ask of Sarah, possibly on a personal level.
Right. And I don't really believe that's happening. I get that same pushback from all clients. And truth be told, I'm not looking, when I'm communicating via email or my team is communicating, I'm not going back to loan out. You could say that self-employed borrowers get discriminated against because we need more stuff from them, right?
Right.
But at the end of the day, I'm collecting all this and I'm asking all these questions. I want to avoid 3 weeks into contract, you can't get a loan done. You've paid for inspections, you've paid for an appraisal, you've got that far down the road. And so we're asking for a lot of stuff on every single client, and we're doing that purposely to serve the client. It's not something to, we got to dig in deeper, because here's something that people don't understand as well. I'm not the end all yes, no answer, pre-approval or get a loan done. It's the lender. So if I'm asking you all the questions, I want to put together a smooth and clean file. You have a better chance of getting approved with the lender if we have a complete file. If somebody asks you very few questions and then says pre-approved, good to go, you'll be in a scenario like I just had some clients that came to me last week. Quicken issued us a pre-approval. We're buying the house from our landlord. We're 3 weeks into it. We've paid for appraisal. We've paid for inspections. They said they can't do it now. We spent probably a week back and forth and back and forth. And it didn't matter that if they were Hispanic, it could have been, white or Black, anything, right?
Yes.
Back and forth. I want the verification of employment that breaks down how you get paid. I want a letter of explanation on, why mom and dad are co-signing. I want all of it because I want a complete package for the lender. At the end of the day, after we got everything, we tried every angle we could. Would more down payment work? Would this work? If, at the end of the day, the loan was a no-go loan. Okay. So if I'm asking,
but Quicken didn't see that because they didn't ask. Some of the online lenders have like quick applications. They don't go deep enough. So you have a sense of security to say that, oh, I'm approved, but you're really not approved because you didn't do underwriting yet. So you're kind of asking those questions up front first.
Right. And that's the thing too, is like, you think somebody's doing you a favor or doing you a service by saying, oh, you're good. You make $85,000 a year on a W-2. I got you. No worries.
Right.
That's not helping you out. Right. You want the credit report pulled. You want, desktop underwriter ran. You want, verification employment. Maybe, they're looking at it and they think that your monthly pay is based on 12 months, but you're a teacher and it's based on 10 months. All these little details, the more we dig in, the less fall through rate we have. There's nothing worse in lending than being a week from closing, being 3 weeks down and having to call you and your team and say, Shaheedah, that one over. I mean, we try to avoid it at all costs. Right. And knock on wood, I can't remember the last time it happened. It's because we're asking more questions than most. And so, if a loan officer is asking those questions, I think that it's important for the consumer to know it's not because I don't trust you. I need to ask you more questions than the next person. I want to complete as a file for every single client I come across.
Gotcha. It's not personal, but as a first-time home buyer, you may like you're like red flag, or you're a little bit more sensitive to that. Like, why are they asking me all these questions? Is it because you're asking yourself those questions? But like you said, for a more complete file, you want to ask those questions up front so you're not surprised. a couple of days before closing, a week before closing, and your loan is denied.
Exactly. Right.
Yeah.
Right. It's to protect the consumer, I think, more than anything else.
And let me ask you this, because at the end of the loan application, usually it says, please indicate your race, please indicate your gender, please indicate. Why are they asking that? Because I know a lot of people skip that part. I know why they're asking. I'll hear from you. A lot of people skip that part because they don't want people to know. They're like, oh, they're gonna flag my application, and but they ask those questions at the end of most loan applications.
Sure. Yeah, and the
why
funny
are they asking
part
that?
is more and more people like, I don't want to ask that, but really they're just asking that because they want to make sure that discrimination is not going on.
Right.
They want to have the data to say, are Pacific Islanders getting loans at a less rate than this group or that group? And I think that the newest application, they keep expanding that. They keep on making that bigger, and it's also that they have data so they can look back and say, we haven't discriminated against them.
If your credit is good, income is good, all of those things are good, you should be getting the same interest rates, the same, opportunities in mortgages as somebody else.
Right, exactly. Yeah. And apples to apples, if I have 780 credit score, this amount of down payment, this zip code, I'm offering the same exact loan, without even looking at what box is checked, right? The pricing engine and all the other things to do lending have nothing to do with what's checked there. And so
for them to have that data, the reason why they're asking, because we've all done mortgage applications before, and at the end you're like, why are they asking me these questions? Why, is this going to impact my rate or anything like that? I think they do make it optional, but they're asking it so they can track that data to see, like you said, because most mortgages are federally regulated or they're monitored. So they want that data to see if there's anything that they need to be mindful of.
Right.
And they do periodic audits as well.
Right. And that's the thing is, like, at the highest level, Fannie and Freddie and the folks that are buying these mortgages on the secondary market, they're watching this stuff and they want to make sure that they're being as fair as possible on a broker to broker level or a office to office level. I think that's really where they want to monitor. They don't want Matt, the mortgage guy, only lending to one group, only doing one type of loan. And so they're going to look at it and as mortgage originators, we do anything that's fraudulent, that has to do with money. We do anything that's discriminatory. You get your license pulled, you could lose it forever, right? And so they're going to look at this stuff and they've got data. It's clear as day, right? If you did all your loans to this one group, you got some explaining to do. And the interesting part about that is, I've got friends in every community, and you might live in a neighborhood and you grew up in the Asian church and you've got Asian family members, you've got an Asian network, if you lend to 90% Asian folks, like, is there repercussions? Are they going to tell you that you're discriminating because you're not offering loans to blacks and whites? And so it's interesting, but that's what it's there for. And I think that more for, like, at the highest level, for sure, like, they've just got machines
monitoring that data.
And so on a company-wide level or even on a loan originator side level, they want to be able to look at that data and see what folks are doing.
Yeah, good to know. All righty, I think we've asked you all the hard questions, Matt, about how you're getting paid, how's it affecting me, all of those things. What is your best advice for first-time home buyers? So first-time home buyers, because again, this is their first time doing it, so they don't know if what's happening, right? What is your best advice for them to get the best deal, going to get a mortgage, and to get the best service? Because a lot of people they'll go with the best interest rate, they'll go with the best terms maybe, but then they can't get their mortgage officer on the phone. They're not calling them back. They're not willing to maybe reach out to the agent to tell them that their finances are good to get their offer approved. So I think it needs to be a good balance between the rate and the terms and the service as well. What do you recommend for first-time home buyers to get both the best deal and the best service?
Right. Yeah. And I think the first point I'll make is that to empower yourself as a consumer, educate yourself is always the first step. You want to know a little bit more about real estate. Thankfully, in 2021 and beyond, we've got great stuff on the internet, right? You go to Shaheedah Hill's YouTube channel, you can learn all kinds of stuff. Like, what do buyers have to do to get an offer accepted? What are some mistakes I need to avoid? Why do I want this? All kinds of information is available at your fingertips. So spend a little bit of time. I'm so excited when somebody says, hey, Matt, I've watched your videos for 9 months. I've learned so much. Thank you. I know why I shouldn't buy points or why I should. I know what an escrow account means. I know all this stuff. You know, consumers are going to be empowered if they're educated, and they're going to feel more comfortable with the whole process. And so, you know, there's a number of different ways to find a good lender and get the, you know, quote unquote best deal. I said something jokingly to somebody and it kind of stuck, and someone's like, that's a cool one. I said, if you look hard enough for the best rate, you'll for sure find the biggest liar, because it blows me away. You know, the biggest financial transaction of your life, the biggest thing you're ever going to do with money for most people is buying a house, you know, 300, 400, 500,000. Out in California, it's in the millions.
Right.
You don't want to have, you know, some stranger with little experience from halfway across the country write your loan and kind of be the captain of that ship for you. It's much better to have somebody you like and trust. So I think one of the places you can find a great lender, you work with a real estate agent like yourself, who's done a lot of deals, seen a lot of things, and you can tell somebody, hey, listen, here's somebody I work with, and I've closed 200 deals with them. I know they're legit. I know they're going to get you to the finish line, right? You can do that. And, you know, people are going to usually shop and ask for the wrong things. You know, asking just about interest rate, asking just about, you know, these things are probably a mistake. If you can find a competitive rate, which you can with a broker, I promise you, you find somebody you like and trust. I think the easiest way for people to kind of vet somebody out is Google them, right? If you Google Matt, the mortgage guy, California, if you Google, you know, whatever your local person is or whoever you're thinking about working with, if they've got an online reputation to protect, usually they're not going to do you wrong, right? Because if I did that after treating people good for 8 years, I started screwing people over. The thousands of hours of work I put in over the last 8 years would all be for naught, right? If a loan officer's in a call center and they worked at Chick-fil-A 3 months ago, you know, they're just trying to hit sales numbers, they might not have your best interest in mind, right? And really right now, with mortgage as competitive as it is, those call centers are just filled with people that are hungry because, you know, refinance pools are shrinking. And so there's less business to be had. They're calling you twice a day, trying to tell you that you should work with whoever this, you know, online lender is. On a purchase deal where you've got a contract and you've signed and you're agreed to close in 25 days, don't risk that with just anybody, especially not. It's like, oh, they told me they could save me $380. Is sleepless nights, a chance that you might close and all that stuff worth it versus, you know, Shaheedah's got a local pro she can refer you to, or, you know,
or I've been watching this guy on YouTube for 10 months and I know he knows what he's talking about, and he'll be able to make sure this works. Because a lot of people, I can save $500 you're saving on like a, you know, a $500,000 purchase is nothing if they mess up that purchase. And like you said, I know you have a lot of videos regarding this. If they tell you they can get you a 2% interest rate, they might, on the back end, that might be, you know, you're buying points, so many points to get that. So like you said, I think in one of your videos, I can get you any interest rate you want if you're willing to pay for it, you know? And a lot of people don't realize that. Right.
Yeah. I mean, I look at mortgage data too, and I nerd out on it sometimes. I try not to name names, but Quicken Loans, they write, they write. I just talked to my data guy, and he was telling me how they're writing loans at a lower interest rate than other companies, but fees are through the roof. Because as a consumer, you have to look at that. You know, I can offer you 2.5% and have $19,000 worth of cost for that rate. You don't want to pay $19,000 in today's money to save $86 a month for however long you're going to be in this mortgage. It just does not pencil. And so I remember, I think I changed the name of it. It used to be How to Compare Loans Apples to Apples. But you have to look at not just the rate, but the rate and the cost, because as much as people don't want to hear this, there's salespeople out there. There's people that just want to get a loan closed. They don't have your best interest in mind. So if gaining your business is as easy as look at this shiny interest rate, look at this 2.75, then they got you, right? But going back to the whole thing about serving people and doing what's right by people so we can get future referrals, I'm not steering you towards that super expensive interest rate just to lure you in. I'm showing you the rate and cost combination that makes the most sense.
Okay, makes sense. All right, Matt the Mortgage Guy. We know we can find you on YouTube at Matt the Mortgage Guy. But how do you want other people to reach you other than YouTube? How should they reach you? And everything will be in the description.
Okay, cool. Yeah, I'd love for people to jump on and Matt the Mortgage Guy on YouTube. I think I'm up to like 550 videos or something. I enjoy the heck out of it, you know. And so comment there. Tell me what you want to see. I've got all kinds of cool stuff planned for 2022. If you have specific loan questions, I set up the URL greatmortgagebroker.com. Just name, email, phone. Let us know, you know, what you're looking to do. I've even got my email address on my YouTube page, matt@mtmg.com. I welcome people to send me, hey, Matt, this is what I heard. Is this right?
Right.
More often than not, I tell them, based on what you told me, this looks legit, right?
Okay.
And so any advice, any way I can help, I'm trying to do that at scale. That's the whole purpose of the YouTube channel, is educating people at scale, because you know, there's misconceptions. You know, you hear them every day, I hear them every day. Why is it this way? They're treating me like this because of this. And so if I can clear up any of that, make people feel more comfortable, then, you know, this largest purchase of their life, which is real estate, might not be as scary and intimidating.
Very, very good information. This has been a very good conversation. I think helpful to a lot of people to kind of, like you said, pull back some of the things that they're not seeing, you know, dealing with their mortgage company. Definitely read the fine print. Don't look at the shiny interest rate, read the fine print, get the fees, like you said, apples to apples comparisons, because again, you will see that, you know, published, you know, interest rate, but then again, you have to look at the fine print. Thank you so much, Matt the Mortgage Guy. I really appreciate this. Yeah,
this was fun. I know that in 2022 you've got some videos coming out when it comes to investing. Have me back on. Let's talk about real estate investing. An investor myself, I work with thousands of investors and, you know, help them with their mortgage needs. So not only my personal stuff, but I've seen so much through investor clients. So I'm looking forward
I would love that.
A return to your channel talking about investing next year.